All right, looks like I am live. We'll see how this kind of goes. I'm kind of watching myself here, and I think that there's a bit of a delay. So it's going to be interesting to see how much delay I get. I'm also trying to figure out if there we go, got a live chat. So we're making progress. Got this. Okay, I can pop out chat. Fantastic. So this will make things a little bit easier. Uh, Bear with me as we kind of get this up and running. This is some new venture for me. And let's see. Okay. Ethan, maybe if you want to say hi one more time on the chat, let me know that this works out, and then I'll keep watching that. Perfect. Thank you, Jamie. Awesome. Now, the other thing, I'm going to reuse this dog. He's cute. Maybe we've got a different audience out here. Okay, good. Our latency isn't too bad either. I think it's about maybe 5 seconds, 5 to 7 seconds delayed. The other thing I thought that was kind of cute about this, I don't know if anybody knows, but my dad and I are both pilots, and that's a lot of the thing that I talk about with trading is kind of the discipline, the checklists, and all that kind of stuff that with trading that I've incorporated, piloting and flying that I've incorporated into trading. The whole checklist thing, you got to make sure that you actually have this process that works out because to be a pilot, to be able to fly an airplane, you have a process, and we need to make sure that we start, A, B, C instead of like A, D, B, C. Then you're going to be landing with your wheels up, and that's going to be a problem. So I thought that was kind of cute having a little dog in an airplane to it. All right. So what we did, I just kind of hopped off from Facebook Live. We're now on YouTube Live. I think what we're going to be working on at some point is actually have both of them at the same time. So that should be great to kind of cover more bases. See that there are quite a few people in here today, so that's awesome. Let me know if you have any questions of anything in particular that you want to be looking at. Otherwise, I'll kind of go over some of the things that I see. And yeah, just kind of let me know because I'd like this to be useful for all of you and interactive. One thing I will say is that I'm not much of a um, earnings trader. I really try to avoid it because I just never know what's going to happen with it. So that being said, we are in the middle of earnings season. I think one of them that I was looking at was Snap, and they just had earnings. That's what I'm talking about. I just don't like earnings because you never quite know what's going to happen. I think a lot of times, we get or bull traps where it looks like something's going to go up and then it just implodes. And I think that I feel like a lot of people would be looking at something like this and they'd say, oh, it's been hitting this level. And then look, it's starting to go up. In fact, it started to get past the hourly 50. But if you didn't have the indicator, if you didn't have for me, the Moxie indicator that I've created and that we provide on Simpler Trading, you wouldn't really be able to see through price and see actually what's going on inside price. And with that, we could see that since the Moxie indicator created a red arrow saying that now energy momentum was now negative, you should not be in this trade. You don't want the indicator below zero and price to be underneath the 50. That's a bad situation. And then if I zoom in on this one, this is what I call an inverse trampoline move. Price should not be over the 50 when the indicator is below zero. And so going into this, again, not that I'm one to trade earnings, but if this were a move without earnings, I'd look at this and say, this is going to start setting up for a short opportunity. That being said, I'm kind of looking at possibly the same thing with the market. I keep watching this thing today. I know it's up huge, but I'm expressing extreme caution right now. A couple of reasons. One, price is back over the third ATR on the hourly chart. Price does not stay that far outside of the third ATR for very long. You can see it to the downside. Here is where price, once again, I forgot that one. There we go. Sorry, guys. Price was outside of the lower third ATR and it bounced right back onto it, back up. And then you can see here on the hourly time frame again, it touched the third ATR and then bounced right back up. So what's the likelihood here that price is really going to stay up over the third ATR on the hourly chart for the S&P? It's pretty unlikely. The other thing we can look at too is that we're at a double top area. So it's likely to pull back. I also like to usually find that price follows the hourly 50, and it hasn't done that yet. All right, so I'm looking at NE and EE. If I remember correctly, this one is a bit of a choppy chart. Yeah, so back in here, like in the daily chart, this is very challenging for me to read. It's very tough. It moves around a lot. Generally, when I was talking to people about this, when I say, okay, follow the daily 200, it's been following the daily 200 very well. And then once this thing finally started to pick up some speed, you can see that it was starting to follow the 50 So we have to find new moving averages to actually start following. A little bit of a dip right there, and it continues. At this point, we're getting into kind of outer space, right? So let me show you that same concept. You see here, actually I need to zoom in even more to see this one clearly. So Mike, my concern about this is that it's overbought. So you see how price is well outside of the third ATR? It doesn't stay that way for very long. So at some point it's going to have to come back down, which it's in the process of doing. Now the question is this thing going to, do it nicely, or is it going to be more aggressive on the way down? And we're kind of right in the middle of no man's land trying to figure out what that's going to do. In my world, the way that I trade, right now, price is underneath the hourly 50, and the Moxie indicator, for all intents and purposes, probably at the zero line. So it looks to me like I want to start being a little bit more cautious. If you've had a good trade with this thing, if you have a short duration option, something that if this starts to go down, it's going to really affect your profits, then I would probably start bringing a little bit in. If you are in just stock and you're holding this longer term, then you've got some room that you can kind of move around a bit. But this thing is getting pretty overbought. A lot of times when I see the 50 very far away from the 200, that's a lot of room to go. If price decides to not stay up around the 50, then it's got a lot of room until it maybe finds its next support level, which is generally the hourly 200. So for now, keep an eye on what's going on here. See if price can get back up here. If it does, then you need to be aware of a double top. And if it doesn't, then watch out for price staying underneath the hourly 50, and if the hourly 50 is going to start pushing price down. There might be a little bit of a bouncing situation at the daily 21. So it's kind of an interesting one to bring up because it's right in the middle of its transition. I would generally lean on this thing has had a really good run right now, and it probably wants to blow off some steam. And you got to figure out if that blowing off of steam and price coming down is going to be acceptable to your position. Hey guys, welcome back. Imran, Jamie, good to see you. Yeah, I know I'm bouncing on both platforms. Great to see you guys following me over here. TGT, starting to look good. Okay, so Mike, actually, here's kind of a good example of something that I'm showing you. So based on knee, you see how price, I'm just using TGT as an example for knee. You see right here, the Moxie indicator went red, and then you can see that price came up here, did that double top, and started to fade. Well, it held up, but what it do? It faded a little bit until it got into the hourly 200. And so remember when I was talking about knee, at the time that we're probably looking at knee is right about there. There's a big distance between price, between the 50 and the 200. Now, fortunately, Target decided to go sideways until it ran into the 200, and then it took off again. But then this other one, you can see big distance here. Here's your Moxie price trigger. This one did a bigger form to the downside. This is what I call an inverse trampoline move. So Imran, I know you were there yesterday and you were asking about some short setups. This is the thing that we need to watch out for, and we need to watch out for the market as a total, is that if price stays above the hourly 50, but the Moxie indicator stays below zero, that is an inverse trampoline move. Inverse trampoline move. Price should not be over the 50 if the indicator is below zero. And in this case, both situations kept persisting. Price kept staying above the hourly 50 while the Moxie indicator kept staying below zero. Not a good situation. And what that's telling us is some big, big negative downside energy is building. And you can see, when did that thing fire? Right there. When it went below the 50 and then came up and hit the underside. It's like it hit its head and then got knocked right back down. And you can see this is also an inverse trampoline move. Price should not be over the 50 when the indicator is below zero. And so big move down. So MRAM, if you're looking for some shorts, just do the same thing I do when I look for longs and try and find good inverse trampoline moves. And this one was pretty persistent. That one was a very good clean one. Pretty clean right there as it hit the underside of the moving average, and then boom, all the way down. Now, Jamie, let's see. We're kind of seeing if this one's ready. Okay, there are two phases to this. One, yes, the hourly chart looks like there could be a move because we have price down, indicator up, and we are starting to cross past the hourly 50. So generally that looks good, but we have to take into context. We have to look at what's going on. Two things are happening. One, if price were to, let's say it comes back down, test the 50 and then goes, what do we have as resistance? Well, if it can get there, we have the hourly 200 as possible resistance. more of what I'm looking at is we still have this 8 and 21 situation. So Jamie, you familiar with the moat situation that I talk about? For those of you who don't know, I call the moat, it's the distance between the 8 and 21. So right now with the 8 is below the 21, meaning our trend is to the downside. Our trend is to the downside. And so if we look here, we'll zoom in a little bit further. Price often can't just cross like this. It can't just start going up because we still have this moat, this distance between the 8 and 21. A lot of times what we see in order to fix that and to navigate that moat is we see price go up, come back down, and then go up. And what that creates is a double bottom. So that's what I'd be looking at. So while we start seeing this situation on the hourly chart actually develop and start looking pretty decent, the situation I see on the daily time frame is telling me I don't really want to go in yet, because probably what's going to happen is price is going to go like this, and it's going to come down, and then it's going to go. And so I want to get on that second bottom. So double bottom, it shows that price doesn't want to go down any further. We haven't had a double bottom yet. We don't have that. And so that's the thing I'm going to be looking for. When you start looking at charts and patterns and moves enough, and you've kind of figured out how things move for you, and you figured out these occurrences, then what you can figure out is that they're going to be going, you know where in the pattern you're going to be. So think about like the double bottom. If you're going to be doing that, you know that price is going to come back down and hit that second booty, and that's what you want to try and get right there. So if we look that, I think that's what's going to be happening to it. And then just give it a little time. I'd say let's look for a trampoline move on the hourly chart or a test of the hourly 50 coming up, and you'll be looking for the second touch on the daily chart. All right, PCG. And all right, so there you go. Here's some of the stuff that I'm looking at. So big picture. There's your double bottom. There's your divergence. It's a big one. I know it took a lot further for this to happen, but it can happen, and it takes a long time to do it. But there's what I'm looking for. And even within that, if I start zooming in on this, let me kind of blow this up a bit, right there. Then you can see even more divergence. See how price went down? See how the Moxie indicator started going up? That's what I'm looking for. Now here, let me zoom in even further so we can get the whole process, and then we can start talking about where we're at currently. Here's that thing. You see how here's the first bottom, then you come up here and you have that first low to high, and then here's that double bottom. That's what I'm looking for. So that's what we're going to be wanting to look for, and you can see that that is right here on the hourly chart. So Jamie, if you take this, so PCG is a good example of what we're looking for TGT. So I would say that TGT is probably right here. So target is probably right here, and notice how we had the hourly 200 overhead, which is exactly what I said was in the way for target. Same thing, PCG had the 200 overhead, and when it hit that, it got knocked right back down. Now what it did is what I call a trampoline move. This is price underneath the hourly 50 and the Moxie indicator above 0. And that's what I said that we should be looking for target. So this is that's the kind of entry I want to have, and that is right here on the daily chart. That is the double bottom right there. And then you can see it kind of chopped around a little bit and then finally started to go. Where did it start to go? Where did this thing finally start to take off? When price was able to get past the hourly 200 and when the 50 crossed the 200. It's also, yeah, that was right about here, but that's where it started to take off. And then the other time that it started to take off was when price was able to get past the daily 50. All right, so enough about the history. Let's kind of see where this thing is currently. So hopefully, PVG Cowboy, hopefully you've been doing a pretty good job with this one, because this looks like a pretty nice situation so far. Another thing, it just got probably a little bit overbought in there. It got really far away from the daily 50, overbought, needed to come back down into some support. What did that support end up being? Right there, the hourly 200, bounced right off the hourly 200. And so far this thing's going up. It's been doing a very, very great job following the hourly 50. I'd be a little bit cautious at this point. Have your parameters, have your stop set. I would say if this thing starts to infringe upon the hourly 50 and starts to break it and fall through it, then I would probably start to get out of it. You might even, John Carter around here likes to say, feed the ducks. What I think is you gotta pay yourself. You want to pay yourself when you can, not when you have to. So the fact that this thing is just hitting the third ATRs up there and has now jumped off the hourly 50, and you look at the daily chart, this thing is horrendously overbought on the daily chart. We did a really good job, or it did a really good job, getting past the daily 200, but this thing is in no man's land. This thing is like flying in outer space. It is way over the third ATR, and this thing is way away from the daily 50. And the hourly 50 is starting to get pretty far away from the hourly 200. So just as a sign of prudence, I think it would be good to probably start cashing in on some of this. Just take a little bit off the table. That way, if it starts to go down or does something or makes a big dip, you won't be too upset. Because let me see right here. You can see the last time that price started to really get up, they come back down. And price is starting to get up, it's probably going to come back down at some point. And I'm seeing that mostly here on the daily chart. And then just let this thing recoup. Look what I've shown here. You see here, right there, let me kind of zoom in a little bit on this because this is a good example. You see how, when did price really start getting going on the hourly chart? When the 50 crossed the 200. What are we almost dealing with here on the daily chart? We're almost dealing with the 50 crossing the 200. So you see that situation? I'd say on a daily time frame, that's what you're going to be looking for. The biggest move that this thing will probably have, and it's going to take probably weeks for this to happen, but it's going to be when the 50 and the 200 start to cross, and when the 50 actually starts touching, or when price starts to touch the daily 50. All right, Ben. Let's see, Imran, is there much to talk about this? Because we kind of covered it. Yeah, I covered this yesterday in the session. I said that it was good and that it was starting to work out. My concern, though, is with this concept that I refer to as angle of attack, that just because you're breaking through the daily 50, when price runs out of support on the lower time frame chart, it's going to come back down to that. So like this, see how price broke through the 50, but the 50 was basically flat, so it came right back down to it. I think that there were some other good examples on the hourly chart. So I do think this one's going to move. You just need to be quick on taking the profits. Yeah, that's not really going to be what I want to show. You're going to want to be quick on taking the profits because when price moves up, eventually it's going to want to come back down to the 50. So there could be a good move, but whenever that move is over, it's probably going to come back down to wherever the daily 50 is, which is going to be right back to 0. So it's got to set up. Just make sure you take your money, cash in when you get it. All right, TXN, and then we'll call it about quits because it'll be about 20 minutes, and I think that'll be a pretty good starter so far about this situation. Texas Instruments. Let's see. It's kind of a messy chart, a little bit out of the style that I like. All right, so a couple things I see, and I'm actually trying to think of a ticker that is going to show me what I want to communicate to you. What I'm seeing, and again, I'm trying to think of a ticker that I can show you. I think I have an idea. Here's the issue. This has been a good bounce. Notice that it did a couple things. Bounced off the daily 200, and notice that it also hit the third ATR to the downside. So I've been talking a lot about the ATRs and price being overbought, oversold. Good buy opportunity. You would have probably had to find this thing on the 15-minute time frame to actually find the right entry. It's had now, what, 2 solid days popping up just like the overall market has. Well, now we're starting to run into previous resistance, this previous price level. Do you think it's going to be able to go much further? And also, so Ryan, let me know. Let me know if you think that this thing is really going to be able to crank much further directly from here. If you see, on the hourly chart, you see how price on the hourly chart is way outside of the third ATR? Like the ATR is like right there, right there. It is really, really overbought. Just like how you see how price was outside of the third ATR on the lower time frame for the hourly chart, it's unlikely that it's really going to stay up there for that much longer. Yeah, good. Okay. So you had a good, if you got into this and had a good time, I'd really start looking to probably take your position off and start, cashing in on this because this thing is pop, pop, pop. The other thing I talk about is that I really like when price follows the moving averages. What you'll notice is that price here on the hourly chart has gone up, but notice that the moving average here is still going down. At some point, the move that I like is when price comes down and hits the moving average right there, like that. I would like to buy there if I'm not already in, or if I'm looking for the second entry. The second portion of this trade is right there. Now, it may not be exactly where I'm drawing it, but that's the concept we're looking for. Look at Disney, DIS. and look what it did. Doesn't this look exactly like the same move? Let's get that zoomed in. Okay, look at the same move. Now, I know I had earnings, and I don't talk about earnings. Earnings are earnings, whatever. That's why I don't trade earnings because of this situation. But if we were to ignore that earnings happened, I bet you anything this move still would have happened. So just like Texas Instruments, price gone up. Notice how much gap there was between price and the hourly 50. And also notice that on the hourly chart, see how price was way outside of the third ATR? Doesn't have any place to go. It's going to have to come back down. Now, what I'm looking for is I want to see if price comes back and actually touches the hourly 50 and bounces off of it, or kind of goes through it and comes out of it. I'm looking to re-enter Disney on that situation. So if you look at Disney, Ryan, I think the best answer here is watch Disney because Disney is probably 1 or 2 days ahead of what I'm expecting Texas Instruments to do. So watch for Texas Instruments to come back down and either bounce off of the hourly 50 or come just below the hourly 50 and then come right back out. And I bet that would be a pretty good trade and a good entry for you. All right, everyone. I think that's going to be it for today. We've got a pretty good couple of sessions so far. Thanks for everybody for tuning in. This is fun. I mean, eat, sleep, trade, repeat. I like this kind of stuff. So you'll be seeing more of me. We're going to be streaming this and doing this every Wednesday starting at 10:30. And I think we're going to be merging Facebook and YouTube together on this. So it should be a good time. And Jamie, yeah, great to hear you guys. Imran, love it. Good to have people that I now know and start building friendships and relationships with out there. So this is great. Yeah, PBG, good. Todd Gordon. Okay, we're gonna have to look that name up. We'll see what we can do about that because we're trying to make sure we have good content for you. ATR, I like to do 2 and 3 because the 1 doesn't really matter to me. I don't like the 0 because that's just in the way, but 2 and 3, so that should do. So thanks again, everybody. We'll be talking to you later, and see you next Wednesday. Be sure to leave some thumbs up and some likes and comments. And let us know that we're doing a good job for you and providing. Oh, Germany. That's the other fun thing. I'm here in Austin, Texas, and getting to see where people are coming from is great. So thanks again. Have a beer. Appreciate it.